Good morning. Today I want to talk to you a little bit about income for mortgage applications. Generally in Canada, there's four types of income that we are using on mortgage applications to help people qualify. Most common is salaried income. So if you are in a salaried position and you want to apply for a mortgage, there is a myth out there with a lot of people that think that with any job that you have to be employed for 2 years before you can qualify or be eligible for a mortgage, which is truly not the case. So if you're in a salaried role, if you're even in a hourly role, the bank does not require you to be in your position for 2 years or more. All they're looking for is to confirm that you have a guaranteed income. So if you're on a salary, they're looking for that job letter that will be requested to confirm your start date, your position, and your gross annual income. And then they're also going to request a pay stub from your employer showing that you are receiving that salary every pay period. If you are working in an hourly position, then the bank will be asking for the same documents, that employment letter confirming all the three things I talked about, the position, start date, gross annual income, and the fourth thing on that letter is going to be needed is what your guaranteed number of hours are per week. They are also going to ask for a pay stub to confirm that the hours that is on that letter do line up with that pay stub. In addition to that, they're going to be requesting 2 years of T4s to confirm that your income is on track. Even if you're with a different employer, same line of work, they're going to ask for those T4s to confirm that you do actually have that type of income to support the mortgage you're qualifying for. The third piece is self-employment. We have lots of options with self-employment. We have options for people when you're a sole proprietor. They're going to ask for your 2 years of T1 generals. And in your T1 generals, which is the tax return that you receive after you file your taxes, that's what your accountant prepares. There's going to be what's called a statement of business activities, and that's a key part of your tax return that will be needed for the mortgage application. And what they're going to look at is what an average is of your 2 years of income, your net income. So this is after all of your write-offs. So you're going to have your gross business income, you're going to have your write-offs, and then you're going to have your net income. We are allowed to increase that income by up to 15% in order to help you qualify. We also have, for people that are incorporated, if you take dividend income or you take T4 income, we're going to look for your financial statements. We're going to ask for your 2 years, past 2 years of financial statements. We're going to ask for your actual personal tax return to see what you take from your company. And there's a lot of options for people. Banks are aware for self-employed that you do have a lot of write-offs. So we have what we also call a stated income program with all of the banks across Canada that allows us to use a reasonable income to help you qualify for the mortgage despite all of your write-offs. So it can be a little bit complex. But don't let that scare you. If you're in the market to purchase and you want to find out what you qualify for based on your current income, the first place is to start with a mortgage application. Last but not least, I'm going to quickly touch on pension income. We have a lot of seniors in our Canadian demographic who rely strictly on pension, and we also have a reverse mortgage, which helps people qualify because you don't have that income requirement. So, four types in summary. We've got salaried employees, we've got hourly employees, we've got self-employed, and we have retired. So when in doubt, please call me 604-552-6190, or my website is trishpiggott.com, and we can answer all your questions and make sure you're prepared for your next mortgage. Have a great day.